a number of banks have been failing. What's important for you to know in this environment, whether you have a personal account or you own a small business? My two guests to discuss this are an economist, a Brooklyn tax consultant. Also in this program, I'll be chatting with Vinny Green, who has written several books and owns a publishing company. But we begin with that situation that's causing thousands of people to have sleepless nights or fears about their money. My guests are Dr. Merih Uctum, an economist and professor at CUNY Brooklyn College and the Graduate Center, and David Grant, a tax consultant in Brooklyn. Welcome to Brooklyn 45.
Thank you.
Thank you.
Dr. Uctum, what factors do you believe led to the banking crisis that was caused by the collapse of three major banks?
Yeah, there were several factors, actually. First of all, you have to remember that all three banks had the same type of clientele, and they were serving some investors to startups and the startups. And everything started with the Dodd-Frank Reform and Consumer Protection Acts being somewhat unraveled, rolled back in 2018, and by which banks with assets less than 250 billion were exempt from many rules of the Dodd-Frank Act, which was something that was passed after the global financial crisis so that we don't have bank runs. On this ground, so SVB was not required to comply with some of the recording disclosure or by some rules that were required to having enough enough cash outflows for 30 days in case there is a run. So that was in the background. So in 2021, there was major, enormous capital that was raised through venture capital firms, and these funds were deposited into banks like SVB, and so this was going on alongside a big boom in the tech industry, and so SVB in particular. So I'm going to mainly talk about SVB because this is what started the whole unraveling. It was awash with deposits, which were all above $250,000. Which is the limit at which the deposits are guaranteed by the FDIC. And so the bank had also very little loan. So, the bank's business is take deposits, loan to the investors or other individuals, and so create liquidity. But this bank had a lot of deposits, very little loans. And so it has a lot of this excess capital. And so what it did with it, it decided to invest in long-term securities or government securities. So this is despite the fact that, okay, let me go back. The long-term government securities are very sensitive to interest rate changes. So earlier, the Fed has announced that it's called forward guidance, that it is going to be increasing the interest rates. And so this increase in interest rate is going to be affecting these assets, the value of these assets. Despite the fact that the managers of the bank knew this, they still decided to invest the money into this long-term interest rate, into this long-term government securities. So after the Fed started raising the interest rates last year because to fight inflation, the tech industry tumbled, and the economic environment weakened. So the clients of this bank, mainly startups, they required more working capital or mainly cash. So they started withdrawing deposits. And at the same time, the new cash dried up. So, and then while the interest rates were rising, this dented the value of this, massive bond portfolio of the bank. And so the SVB was short of funds. And it decided to sell some of its securities. And as soon as it started selling securities, some of the investors who knew about the banks, who understood that the bank was in difficulty, started withdrawing their cash. And because they didn't have insurance over their 250,000 cap, and the rumors spread very quickly. The rival banks then were flooded with calls from customers wanting to withdraw their cash, and the stocks, the value of the stocks of this, all of these banks started crashing, and so that's how the bank run started. And as the bank run started, the stocks went down furthermore, and then the SVB became insolvent in 1 day. In 1 day, it became insolvent. It was quite amazing, and its demise then spread into the Signature Bank and the third bank, the First Republic, and which were they were really the second largest bank failure and the third largest bank failure in the U.S. history.
We're going to talk a little later about the bank failures and whether we should be afraid of future bank failures. But yeah. David Grant, good to have you on the program as well. What's important for Brooklynites to know about banking and their financial health in this environment?
Well, I believe that one of the lessons learned from the failure of the banks is that most consumers probably won't rise to 250,000 level in their bank accounts. But if you do have the luxury of having more than 250, one of the things is that you should make sure that you have amounts under those amounts and spread it out across different banks, because that way you wouldn't have to worry about a run on the bank, so to speak. When these issues or these failures arise, you would have already been covered for the deposits. So that's one of the things that one of the elements that came out of that you should really spread your money around so that you don't have significant amounts in the bank. I think one of the other things coming from a tax perspective is that the banks didn't diversify their portfolio. As Dr. Uctum was saying, they put most of the deposits in low yield treasury bonds, which of course, when they tried to sell them, because they hadn't matured, they had a significant loss. For the individual consumers, especially people with 401k plans, one of the things that they should keep in mind is that they should diversify their portfolio, much like the bank didn't do that on their end. A lot of people that have 401ks today usually let them be handled by, whether it's through a company or individual bank, don't really have someone that is guiding them on the 401k plan, but you should be monitoring them and make sure that your portfolio is diversified. That way you minimize your risks in terms of how your money is spread out within the portfolio. So that's two of the elements I think that takeaways from the banking fiasco. Diversify and make sure you spread your money over many banks below that 250 threshold.
Okay.
I would add one more thing to that, to make sure that the bank that the Brooklynites are using is FDIC insured. I just learned that not all banks are. I didn't know that. I thought they were all insured, but apparently not everything is insured.
You are correct. They're not all FDIC insured.
And for thousands of people who don't know, what is this FDIC?
Well, it is. It's the Federal Deposit Insurance Corporation. So that's stand for that. It's a government corporation that provides insurance to bank deposits in American commercial and saving banks, and it was created just after the Great Depression, when a third of the banks had failed after a massive bank run, nothing compared to what we had recently, and also until then, the U.S. was experiencing a lot of bank failures because of these bank runs, and had a very unstable financial system. When you look at the data, it's the financial crises were very frequent. And since then, so since the 1930s, I heard that no one who had their money covered by the FDIC has lost a single dollar. But you have to remember that initially, when it was created, the insurance limit was $2,500. And then now, so after the 2008 crisis, it became $250,000. So it increased over the years. But so it was a big stabilizing influence.
That crisis, that financial disaster of 2008, do you see that happening again, either you, Merih, or you, David?
No.
I don't really see that happening again, because there were provisions put in place with the Dodd-Frank to combat that. And you would notice that this string of bank failures is totally different than what happened then. So I think that sometimes when these things occur, you're more in tune to not have that happen again, I think. But the issue arising for banks would be, what is on the horizon that is going to be different? And I think that a lot of these managers and these people that are in the banks need to pay more careful attention to, especially in this environment where there's a lot of volatility, more careful attention to what's going on with people's money, because I believe that the issue with Silicon Valley and Signature Bank were all foreseeable. The interest rates are going up, so the value of the bonds are going down. But they had, in that old term, the eggs in one basket, so to speak.
Yeah, and also I can add a more economic perspective to this, comparing the two situations. In 2008, in the run-up to this recession, what banks were doing were extending very easily cheap and easy credit to underqualified borrowers, and to finance risky and what we call now subprime mortgages, and under the very lax oversight. And so the result was that we had a housing bubble that collapsed, and so then banks and investors ended up holding worthless mortgages and mortgage-backed securities after the bursting of the bubble. Now, when you look at it now, the housing market went still very high, but that was because of the inflation, and it's not considered to be a bubble. And we had this inflation because of supply chain problems and inventory shortages and COVID shutdowns and etc. But these don't show the weakness of this housing market that existed in the Great Recession. In fact, the housing market relatively is quite healthy. So that's why, if we have the recession, and probably we will have a recession, there will be higher unemployment, and probably some people will lose their houses. I hope not, but it's not. It's very different. The the nature of the two recessions would be very different.
David and Mary, you both said that banks have to be more responsible. Let's talk about how ordinary folk like myself, like many of our viewers, let's talk about how they have to be responsible. Now, I know, Mary, you teach financial literacy as well in your classes. Let's talk about the importance of being literate financially.
Oh yeah, it is so incredibly important to be financially literate, because the best way to protect oneself against this economic crisis or financial crisis is to know how to spend, save, invest wisely, and manage debt. And it's more important to do this informed decision in early adulthood, because that has an impact over the whole life. In particular, approaching a recession, people must really, what we call the recession proof your finances, so that because during a recession, a lot of people find themselves in hardship, financial hardship. So it's better starting like paying off expensive debt early, as quickly as possible earlier, and also making sure that your credit score is in good shape, because the recession puts some people in situations where they must take on credit or debt. And if you have a good credit score, which means that you're just making regular payments, you don't have to pay everything. So you will be much more ready for any difficulty. And also, in general, it's important to plan for a retirement as early as possible to protect from, economic crisis.
We've got less than 3 minutes to go, and I want to give each of you 1.5 minutes. What's the most important information you can give to our viewers to ensure that their money is safe?
Well, as I mentioned before, looking at making sure that you're below that $250,000. If you're so lucky as to have that in your account, definitely diversifying your portfolio to minimize your risk. As Dr. Uctum spoke about, trying to find out about financial literacy. Also, taxes do play a part in understanding how your money flows, whether you're paying too much taxes or too little taxes. This is very important. Schools definitely, I think, need to upgrade their curriculum to have, for people entering the workforce and starting to, make money, how to save, how to budget their money. I think that these things should be imparted into the curriculum, so people moving into the workforce have a better understanding of how these things affect their money, because a lot of them don't.
Yes, Dr. Uctum, David just threw that one right in your face. So
Yeah.
your response and your 1.5 minutes.
Yeah, the thing is that I have very little to add what David said in terms of make sure that you don't put more than 250,000, and in terms of diversifying, in fact, it has been customary for people to buy U.S. government securities because the U.S. government has never defaulted on its debt. And not to be afraid of now all these political noises that you hear in the back. Well, are we going to pay the debt? And U.S. always pays its debts. So the U.S. government securities are always safe. So if you don't want to put your money in a bank, you can always put it in a U.S. government security.
Thank you very much, Dr. Merih Uctum. We wanted to talk about your experience with the Federal Reserve, but we'll have to do a part 2 of this program. So thank you for yes. So thank you for being on Brooklyn 45, and David Grant, tax accountant. Thank you very much for being on Brooklyn 45.
Thank you.
Thank you.
I am now pleased to welcome Vinny Green, who is an author of several books. Vinny, welcome to Brooklyn 45.
Thank you very much.
You have a book responding to active shooters in houses of worship. Wow. And I know that you go to a house of worship as well.
Yes.
What's the purpose of this book?
Well, my career for the last 43 years, next month actually, is conducting investigations in the area of corruption, and it's taken me to different countries. And I've seen terrorist activity in all those countries. And I've also seen a lot of it, of course, here in the United States, the active shooter phenomenon. And what I've noticed in looking at, I also do some training in that area. And I've noticed in all the training that I've seen put out, especially by the government, while the training is usually pretty good, a lot of what they talk about is running and hiding, which isn't a bad thing, but that doesn't work necessarily in houses of worship, especially if you're in a synagogue or a mosque or someplace like that, where the males and the females worship separately. Females in synagogues are usually upstairs, and also in mosques they're in other rooms, and the men are in a different room. So, and what I've seen in my studies is that usually the men are on the lower levels, which is easy to run and get out of there. So that doesn't help you as a man save your family who's upstairs in the daycare centers or something like that. So I thought about maybe coming up with alternatives to running, and put together this book that we call Active Shooters in Houses of Worship, and it takes into account where everybody is in the building. The 5 basic things that the government says to do, and I don't say the government in a negative way, they've come up with some good ideas, but it's basically hide, run, go to windows and things like that, but it all requires you to leave people behind. What we talk about in our book is not running and leaving people behind, but figuring out ways of knowing ahead of time where you should go. In all my books, I employ a technique that's called the what-if process, which I learned from my undercover days, working with the Department of Investigation. It's that you need to think ahead of time of when things go wrong, what am I going to do? You can't wait until it's going wrong. It's too late then. So when I walk into any place, as soon as I walk into some place, I start thinking about, if it all goes wrong, what's the first thing I need to do? What's the fastest way out? Where shouldn't I sit in a location? And those are the different techniques that I employ in this book that I'm talking about, Active Shooters in Houses of Worship.
Okay, there's another book. We can see part of the title behind you. Tell us about this book. I understand that it's associated with lots of young kids.
Yeah, this is a book that's called Beneath the Surface, and it's our first entry into the area of horror and mystery. And the young lady that wrote this book, Dana Sabine, she's actually the daughter of my illustrator that illustrates all of my children's books and youth books. She lives in Pakistan, and she and I basically got an excellent relationship that we've established over the years, where she's gotten to understand what I want in books. Because what I've learned in doing books is that language is a poor form of communication. If you haven't lived my life, it doesn't matter if we speak English or the same language, you don't really always understand me, because we haven't experienced the same things. She and I spent a lot of time together over the last 5 or 6 years, so we've gotten to understand what it is that I need in terms of what I want my children's books and my youth books, and especially in this particular book, this horror book. It's really hard to get somebody to understand how you envision demons and things. And if you haven't watched the TV the way I watch TV, or the way her child watches TV, it really takes a while to really get across to that individual what's the picture that I'm looking to get. And she and her daughter and I sat down for a couple of weeks just talking about what it is that she wanted to bring out. and I think it came out pretty good. She's
Okay.
a young girl of 14, and she really focuses her stories in the area of anime. Are you familiar with anime? Which is a Japanese type of cartoons. So when you look at the illustrations in the book, they're more anime type illustrations than Superman, Batman type illustrations.
We've got less than 2 minutes. Let's talk about how you involve other children in your books. I understand you have lots of books with kids 7 to 14 years old.
Yes. I either have books with kids who write them. I have my niece who wrote a book called The Unicorn, the Rainbow, and the Princess. I know you can't see, but she wrote this book when she was 7 years old. She's 8 now, I believe. And I was just talking to her one day about the fact that I do books, and she said, "Can I write one?" And I said, "Sure." So I told her, asked her what she wanted to write about, and she was telling me a whole bunch of different things she wanted to write. I said, "You know what? Write the book and then bring it to me, and we'll figure it out from there." And she wrote the book, and it actually surprisingly didn't really require a tremendous amount of editing on my part. I think it took me less than a week to edit it and get it together. And the biggest hurdle was getting the illustrations done. And that's because I was dealing with my illustrator who's in Pakistan. But what she wrote was nice and clear and to the point. Another thing we do with kids, I know I only got 2 minutes. Any parent that wants their child to have a story that's about them, we'll do that for them. Just tell me who your kid is, what is he or she like, and we'll write a book about them.
And how do people get in touch with you? I know you own a publishing company. You've got 30 seconds.
Okay, we're at gsquarepublishing.com is the website that we have. You can go in there and email us from there and that's all of our books. So that we've written 70 books, but you can also get in touch with our publishing team there.
Vinny Green, author, publisher, and we love the work that you're doing with young people. We're going to talk to you at some future date about our young academic achievers. But congratulations on the wonderful work that you're doing with kids and publishing books for people of all ages.
Just one last quick thing. We've got a book coming out in July where we had kids from all over the world submit manuscripts to us. And if they submitted a manuscript, their manuscript is going in the book. And they each got $25 for each manuscript that they submitted. And that'll be out in July.
Okay. Well, again, thank you for being on Brooklyn 45.
Thank you for having me.
On behalf of our Brooklyn 45 team, I'm Sam Taitt.
Brooklyn 45 is a 501c3 not-for-profit, and we welcome your support. Check out our website, brooklyn45.com, and feel free to donate or share it with your friends and family. Have any comments or questions? Send them to our Facebook, facebook.com/Brooklyn45TV. If you have any questions or topics you think we should cover next, shoot me an email over at brooklyn45tv@gmail.com. Thank you again for watching.